Well, hello to all my fellow big trenders. This is Price Headley out here as we look at our weekly market outlook video outlook as we look ahead here on June 1st, 2009. And here we're looking at a chart of the S&P, SPY, focusing on the weekly chart for starters here. So we're looking at the weekly here, and we're saying, okay, look at the market. We've had a nice rally back up. Everybody's getting nice and happy now, but you can see that we're just getting %R going into an overbought status here above the 80 threshold on a 0 to 100 scale on this week's initial bounce as we start off the week here. Today's June 1st, the week ending here June 5th, and so we see that basically we're looking at a market which we've got the upper acceleration bands also sitting here up here at 96.6. So we've got nice little recovery, but I'm saying bottom line is we're right back into some pretty key resistance when you look back at the highs from the start of the year. The high on the S&P when we started off in early January was 94.55. As we sit today, so far we tested 94.65, just 10 cents above there. Remember, the SPY trades 1/10 the value of the S&P 500 index, the SPX roughly, and that means the SPX close to 943 right here. And so bottom line is that we're saying, look out, we've got some resistance here, just going over a bot unless the market can clear through. Now, the one good sign on the longer term charts was that our monthly chart, remember I talked about last week how the monthly chart was in a bear retest from April's highs, and that's what made it so critical. Off of April's high, you can see was 89.02. Well, we closed above that with the end of the week and end of the month this past Friday at the end of May, effectively with the close at 92.53. That last hour rally this past Friday was kind of the clincher that we weren't going to break back under that 89.02 level. So this takes us out of the bear trend. That's now an exit signal from our BigTrends toolkit using just a %R as one particular indicator. You can see that efficiency ratio is still negative here. That's still saying, okay, we've got some more ground to make up. But bottom line is that it says that we're moving out of the bear trend into more of a trading range. And that fits with the longer term support that you can see that's held right down in here back at just under the 80 level. This was sitting at about 78, or about the equivalent of about 780 on the S&P. Now you start to look at your longer term targets. If we can get through, notice how important that area just under 94 I was just talking about is. That was a low back in the 9/11 2001 month. So that shows you why that's such an important number for the markets. You can see how it also acted as resistance just under 95 to 96 back here in late 2002. So we're still running into, you can see 94.5-ish here, resistance right into this zone here. So that's why we're playing it a little bit cautiously on a day-to-day and even week-to-week perspective. But longer term, if we could get through that 95, 96 resistance, that would really start to improve things quite dramatically. Then you could put a target all the way up towards the next series of key lows that broke down back around 110 or 1100 on the S&P, give or take. So bottom line is that's critical. Now we also, our other quick little update is the VIX. You look at the VIX chart as we go back and just pop up 1 second the SPY. Let's just check that one more time. Let's go back to look at the VIX just with the %R on here, and we want to just use the same chart as the template. And so you can see VIX is trying to break now its 20-month moving average, and so what we're looking at here is a very choppy kind of getting down near an oversold zone, not quite there yet, and that's not really the most telling chart. What I would really focus on right here is the weekly chart. Remember, we've said the weekly's been in a short-term downtrend based on %R, but we said that the 30 level was the kind of all critical zone to watch. Well, you know what happened last week. We finished right down, just right around 30, give or take. Some charts it shows just above 30, some charts it shows 29 3/4. Right now we're sitting 29 1/4 during the week. We got as low as 26.57 2 weeks ago. So what matters is what happens on a weekly close. We're still watching 30 as an all critical level, and with the VIX relatively low, along with put call ratio showing that people are getting too optimistic, it's keeping me relatively cautious here on a very short term basis, looking for some little pullback to get a little bit more fear back in the market. We'll look for those retests as a chance to get back on board this short-term uptrend, but in the meantime we recommend that you stay reasonably cautious and wait for those